Hey everyone, it's KF here. Welcome to my daily recap. Today is July 25th, 2018, and we're going to go ahead and review some of my trades today. Today was a red day for me, and I really want to break down what went wrong today. It was a great day up until about the last half hour, and things went south on me. So let's go ahead and talk about today. As always, you can start a free 1 week trial with us at kfinvesting.com there. So here's a review of my trades today. Like I said, I finished in the red 1.8%. I closed out on a bunch of swings, and I'm not too interested in talking about those at the moment. I mainly want to talk about my day trades, especially the second to last day trade, the one that put me in the red, which was COOL. All right, let's go ahead and get started talking here. So the first one I'll talk about is HA. This was a winning trade for us, nice and steady. I took this double size, so it was actually a 1% gain trade, but since I took a double size, you'll see I have a plus 2% profits there. Now, why did I take this play? So this is kind of a unique play. This is very much momentum play. I really liked playing this sector when it has positive earnings. These tend to follow through a lot better throughout the day than other types of stocks. So HA, Hawaiian Airlines, I took this over the $40 level. Now I took it kind of in a weird spot. Notice that this had broken above $40 previously here in this area and hit 40.35, pulled back, and it had kind of wavered back and forth over the $40 area. Well, under this point, once it pulled back under 40 here, that's when I put my alert that I was going to take it over $40 because I felt that that's when I was going to get some better retrace on it. Now, my hard stop, oh, I forgot to draw it here. My hard stop was 39.49, okay, 39.45, I believe. 39.45. And it came within 10 cents of stopping me out right here. I don't have my line drawn, but my stop was right here. It came within 10 cents of stopping me out after I bought over $40. And then that momentum grinded for me throughout the morning, and I ended up taking profits about an hour into market open here at 40.45. It did continue on, and it was a solid trade for me. So this was a breakout play, very much kind of a wedge play, bull flag breakout here over this whole dollar level of $40. Okay, this was very much a play over natural resistance of $40, even though it had broken out above that previously. Now, I mentioned this is a rinse and repeat play. What do I mean by that? What I will do oftentimes in these situations, and I mentioned this in the voice channel when I was talking with my members, that this was going to be a potential rinse and repeat play. If it pulled back to $40, we could get right back in at $40 and just do exactly what we just did, ride it back up and take profits in the same area. I call those rinse and repeat plays. I ended up not taking it, but still a winning trade for me nonetheless. It was solid. Okay, next up, I want to talk about AKRX. This was a losing trade for me. Now, I took this over 1780, and here's why. We had a descending wedge here. Descending wedge is a very bullish pattern if it breaks above this upper trend line on a descending wedge. If you get a stock that is trending downwards like this, but trading in a tighter and tighter range, we call it a descending wedge. And I wanted to take advantage of the breakout to the upside. I like the time of day. We were heading in kind of closer towards power hour here at about an hour and a half or 2 hours or so remaining in market open. Took it over 1780. You can see it was a good spot. Lots of people were jumping in this over the 1780 area here. Got 10 cents or so of follow through, and then it just did not stick. Even when the news came out about the European Union and Trump working together, it just could not gain any traction. Notice my stop loss, 1759 stop. Why was this my stop? Well, notice that this is a very critical prior level of support here. Let me get out my pen here. So notice this level of support here, right here, also right here, even though it didn't touch right there, it was the level of support that this was kind of gravitating off of. So I knew that this was my level of support that I wanted to base a trade off of. Got stopped out at 1759 for very minimal loss and ended up continuing to fall. It's fine. I move on. Losses will happen. I felt okay about taking that setup and, on to the next. All right, so next I want to talk about, going the wrong way here. CHKP, this was a winning trade for me, real small. I took this one 4x size, 2x size. I was in double size on this one if I'm not mistaken. Meaning I took heavier position size on to take advantage of what I anticipated to be a smaller move. Real textbook bull flag breakout for me here, as you can see. Very textbook bull flag breakout. I liked the volume and time of day on this. I got in this over 115.90. The majority of traders, as you can see, based off this volume right here, the majority of people were waiting for the 116 break because that was in sync with this 116 break right here. But I was confident that I could get in over high of day 115.90 even prior to the natural level of resistance at 116 and ride it up for profits. Was solid move, solid action. I tried to be as patient as I could. Took profits about 38 cents off of the highs. I felt pretty good about that trade. Now the trade I want to talk about the the most is this one, COOL. This one is what put me red on the day. I was green about 6% on the day, and this one just hurt me. And there's a couple of reasons why it hurt me. So first I want to explain my rationale behind playing it. Why did I take this the way I did? I bought this over $23. Okay, I bought this right here. You can see it initially had kind of a weak breakout. My stop loss was 21.49, which was a major problem here, as I will talk about. So I got stopped out right there, and it continued to fall. I was glad I had a stop out, and it fell another $1. Now, here's why I liked it. It was a 3-point level of resistance. Notice the resistance here. This was prior support here, and then it turned to be resistant here. So this is a very critical level here to watch this stock over. I took it over that $23 level. Time of day, we were heading into close. Markets were looking really good. Everything was looking awesome. This is a lower float play. I knew it could move pretty quick for us. I was really excited about it. Floated up. I had about 45 cents a share of profit or so over the $23 level. And then all of a sudden this happened, and I really don't have much of an explanation for it. Stocks will do what they do. Tons of people were waiting to short it back under the $23 for whatever reason. And I got stopped out at 21.49. Now that's fine. The technical reasons behind this trade, I'm totally okay with that. I had a legitimate price target way up here above $26. So I had a 2-to-1 risk to reward ratio. I was gonna risk $1.50 for potential to make $3. I'm fine with all of that. Really, that's not my issue. My issue is that I was in too heavy. Okay, with this much of a stop loss. $1.50 stop loss on a $23 entry, that's huge. And that's what cost me. And I was just so dumb. I was not prepared to lose on that. Notice this stock, let me go back actually to AKRX. I'm sorry, my slides are messed up. This is not Acorn. Ignore that. I'm sorry. Forgive me. This is a sloppy slideshow. AKRX, I had a 21-cent stop. Okay, I had a 21-cent stop here on a $17 stock. Okay, now imagine a $1.50 stop on this cool play. I was just in it way too much. Had I been in half size, this would have been a fine trade. I would have totally been okay with that. I'm still so frustrated that I went in as heavy as I did, and I gave it as much room as I did. Because yeah, the stock's gonna, we're gonna get stopped out. This stop loss was in a good spot, right under here, under levels of support. But being as heavy as I did, I just risked way too much capital on this, and that's what ended up putting me red on the day. So key lessons learned, most importantly, prepare to fail. That sounds weird, but every trade I take, you have to ask yourself, if this hits my stop loss, what am I faced with, right? That's the first thing you have to figure out. Because in my situation, I really just wasn't prepared to fail. I was so confident it was going to be a winning trade, I didn't bother much thinking about the risk management of it, and that's just so silly. You can't get caught doing that. Lastly, I want to talk about being a little bit wary to swing trades given our current earnings season. I'm in a swing right now, and I'm down a little bit on it because Facebook released earnings after hours. They were negative earnings, and it just wrecked the whole market. So my swing, I'm in IQ right now. I was up 30 cents a share or so at close, and then Facebook announced earnings. I'm now down like 30, 40 cents a share on it. So really be careful with swinging in this earnings season because they're so mixed right now. Our earnings are so mixed. So there's my daily recap. I hope it's helpful. We are having a giveaway on social media. Check it out. Enter it on Twitter, Instagram, or Facebook. Giving away a free month and a free t-shirt in the chat room. If you are a member, I'll give you $100 cash instead. I hope you enjoy this daily recap. Thank you for hanging out with me. I can't wait to trade tomorrow.